Welcome to the 2024 SPY Tomorrow SPY T Trading Webinar. It's good to have you here. My name is Rosh. I am the founder of SPYtomorrow.com and developer of the SPY T Trading System, all of which we'll talk about in this webinar. And of course, like the other webinars we've had in 2022 and 2023, this updated version, in which there's a lot of good new information because there are a lot of updates, will have the question and answer section at the end, which again, I find really valuable. Also, for those of you who are catching this on the replay, I will definitely be editing this to make it easier for you to watch so you can thank me now and won't have to suffer as much as those who are watching live. But anyway, nonetheless, I really just want to dive right into this webinar and share the information that will help you become an overnight swing trader, a better overnight swing trader using the spytomorrow.com platform and system, which is free for those of you who wish to just follow the free version on the front page of spytomorrow.com. We actually publish an up or down pressure, which we'll get into a little bit more in a few moments, free at 4 o'clock Eastern Standard Time, which for many of you who have brokerage accounts that allows you to trade for 15 minutes after the market closes, it's no big deal at all. But there are some things we do have now that we've found very valuable. Let's get right into really the concept of SPY Tomorrow, and that'll help you understand maybe if this is right for you. Because honestly, this way of trading is designed for those who want to be aggressive traders. You want to do more than just putting money in a 401k. You want to be active, but day trading isn't quite for you. You just may not have the time. Like me, I'm a busy professional. I own companies, and I just every single day consistently. And quite honestly, I'm not that good. I'm not that good of a day trader. And the fact is, most day traders are not that good. Really, I think studies are saying less than 5% of day traders actually make money consistently. And, even the overnight swing trading or swing trading in general is still hard. And I'm sure the odds are better of being successful. These certainly, I think, much better. The odds are much better at being successful in the SPY T overnight swing trading system. So if you're looking for something between, say, swing trading and day trading, you want to be active, but you definitely don't want to just depend on the long-term performance of a 401k. Well, then I think you've come to the right place because we have a lot of good information. And let's start with this chart. What this chart says is that if you had started trading in 1993 when SPY, the ETF, which represents the S&P 500, and the ETF is an exchange traded fund. It's like a mutual fund that represents maybe a sector or a group of stocks or whatever it may be, like a mutual fund might do, or like even an index fund, except it's traded on the stock market. And so SPY was the first, I believe was the very first one, and that was in 1993. And what this is showing is if you had bought SPY in the morning and sold it at the end of the day, through all of this time, you may have been a little ahead, a little bit behind, but most likely have lost or broken even after all of these years. However, if you had bought SPY at the end of the trading day and you sold it in the morning, well, you would be up, depending on the chart, 600, 700, 800, some charts so 1,000%, depending on the time frame. Depending on the chart I end up pulling up and putting in this webinar later. That's why I'm kind of saying that, because there's no chart here as I'm talking about this. But when I do the edit, I'll put one of the charts for people to see. And so what that says is that the action is overnight. Now, There are three parts to the SPY tomorrow trading system. And the first part is that time frame. The time is from the end of the trading day, like literally the last seconds of the trading day, uh, 3:59 and 30 seconds, 40 seconds ticking down. That's when I buy, and then I sell the next morning. Now, there's something that we're moving away from. We're moving away from saying, hey, you have to sell first thing in the morning. We're working more on a time frame basis because, of course, that's what this is all about. That you can use technicals if you're really good with technicals, but we're also moving towards a time frame basis to help once again take this advantage that we have in our overnight trade, that once you buy, there's nothing you can do. The emotion, you can't sabotage your trade with emotions. You're just going to have to wait and hope your signal, which is correct, which is the second part. It is a signal. And we use the spytomorrow.com signal again, which is free on the front page of spytomorrow.com at 4 o'clock Eastern Standard Time. Now, members can see that signal beforehand, about 5 to 10 minutes before the close, so they have more time to prepare, plus some additional information that we have found very valuable. And I'll get more into that, into the algorithm in a moment, because I find it rather interesting. I think you may too. And so the third part is the way in which we trade. And yes, in some cases, we trade directional in very small amounts, or what we refer to as the SPY T trade, which is generally a ratio trade. If you've watched some of the past webinars, I've talked about like the SPY T A trade, which is probably my biggest video out there right now. But there's SPY T B, C. But what does all that mean? Well, we've made an adjustment in the way we describe our trades. And I'll get more into that too. But to give you a little glimpse, we will use a formula. And so it might be SPY -T. So SPY for the ETF SPY, but it could be QQQ -T. And then it's a letter. And it starts with A. And A represents the option, the first option in the money. So B would be the first option out of the money, and AB would be 2 in the money, and C would be 2 out of the money. And then we will say 2. So SPY T B, first option out of the money, 2, which represents 2 to 1 options ratio, or it could be 3 to 1 options ratio, dash, let's say 7. And that would be how many days until expiration. And the reason we do this is so we can trade information with each other, say in the group chats, or, we want to keep a log and remember what we did and what was the trade. It's just a simple way to figure that out. And there may be more elements to the formula down the road. This is a relatively new thing. And the reason it's relatively new is we're really adding on a lot of features and rethinking a number of things. 3 things I can tell you that we have rethought and improved upon immediately, which we'll talk about a little more in the webinar, is 1, the probability number, which has been a game changer for the SPY T traders. Because a low probability, meaning, let's say the probability number is 55%, it's pointing up, but that's not very strong, right? It's almost like flipping a coin. So maybe you'll trade differently. You'll do a different type of trade, or more conservative trade, versus an 80% pressure reading, or probability number. You'll be more inclined to say, okay, odds are really on my side. And so, and it works out that way. We've been tracking it long enough. I'll get into that more in a moment. Again, 2, we have this formula, which has been very helpful that I just talked about. And 3, working on a time-based sale. So we buy in the morning, then we sell the next day, but we may just automatically sell at 11 o'clock or 10:30 or first check at that time, if versus just waiting for the market to open and then trading immediately, which I do recommend in the beginning, because you do need to practice. Now, some people are still going to use technical indicators. Maybe you are a reasonable day trader. So when the market opens, you have some technical indicators that work well for you to help you get out of that trade. However, I have found that as of late, especially, but I've noticed this through the years, there's been different points, again, depending on how much volatility there is, which is another good topic in a few moments. But if I just held on to a lot of my trades till say 11 o'clock rather than getting out, even if it started going down, chances are it may go back up if the pressure was still behind it. I would make a lot more money if I just stayed in till 11 o'clock. Yeah, I may have a few more losing days and some days like, man, I should have gotten out. You could look, it's during the day, you can put a stop to minimize any losses. So there's nothing wrong with that. Putting a stop for security, maybe to lock in a little bit of profit, but give yourself enough room to let it run. So a lot of day traders that I've talked to said, my best technique or one of my best techniques is to look for my setup, buy in, and walk away. Just let it run, let it happen, let it set up and go. If I'm there watching every tick, which is why we do overnight swing trading, because we are not really good watching each tick of the market of that ETF or stock. And the emotions can take over, or you can second guess yourself or make audibles, meaning you're not following your plan, but you have a gut feeling. Believe me, gut feelings are not the way to do well in the market. And a lot of times we minimize our profits and maximize our losses because we have this feeling, hey, it's going to come back, it's going to come back, or we cut ourselves short because we think, oh, I have little profit and I don't want to lose that. So greed takes over, greed and fear, greed and fear. So we do this overnight swing trade to help us out. It really just prevents us from sabotaging ourselves, but still, again, being active using this indicator and then again using the time frame. But let's talk a little bit about this algorithm and the probability numbers. So a number of years ago, I started playing with numbers. I had opened up an account and I found that, the commissions were a lot lower and I could start experimenting with some of my ideas from 20 years previous. And what I did was I started playing with some numbers that started to correlate to how the market might open the next day. I called them pressure readings. And I've been developing them and I've had some great runs that did really well. But then there were some things that failed on me, or I had to discover what we refer to as the switch, which it really is a number that we still look at that kind of represents the overall mood of the market. You can't necessarily trade off of it. You can kind of. It's maybe about 65% correct if you trade off of it, but we have better readings than that. And we've incorporated a number of different scenarios. And eventually, by including the heart algorithm, by the way, which we still use part of as a measurement tool that I'll talk about later, but the heart algorithm even broke uh, for whatever reason. So I eventually, by the summer, I'm really about at my last straw, summer of 2023, and I had some ideas of some stuff that had worked in the past, in which I really was measuring the pressure. I was taking certain readings at 3 o'clock and then another reading at the end of the trading day and measuring this pressure using the calculations that I had developed. But I had to put some infrastructure in place to do that. And really, that the previous fall, I had developed some team members to help with this process. And so by the summer, I was ready to really test some of these things. And I did. And I started with what I refer to as the purple algorithm in July. It was working so well by say August, I really had it going underway and was available to members. In September, I think it was fully launched. And then I've been adjusting it ever since, but we haven't had to change the fundamentals of the algorithm since July of last year. This is the longest time frame. We're working towards a year now. So we have a lot of data and obviously it's working out and we're sticking at about 75% correct on average. Now, there are times, and we have had to make some tweaks that have improved things along the way, but there are times where it'll run 80, 90% correct, but then maybe have a good number of days wrong in a row, whatever the reason. Sometimes it's news, sometimes it's the CPI, sometimes it's during earnings season. There have been a couple times where we just had 2, 3 days in a row and I had no idea why it was wrong. It just was, but it kicked back in and everything was right. Maybe it was just, the mood of the market, the anticipation of the market at the end of the trading day was just wrong. Things didn't work. Whatever that measurement of pressure just was wrong and didn't follow through the next day. Maybe it was something that was happening in other parts of the world. So many reasons why, but again, it correlates to about 75% correct over the long term. You can make money off of that because if you remember that chart in the beginning, showed us that if you bought at the end of the trading day and sold in the morning, we were looking up only. We're only looking up. So if the market went down, you lost. If the market went up, you won. And the reason it worked is that the market opens up or has opened up about 54% of the time. So over time, it worked out for the most part. Obviously, the amount of movement played a role. And look, it just worked. And that leads you to this question, what if? What if you could predict how the market might open either up or down the next morning? And it was over 55% correct. While we're doing a lot better than that, again, as I mentioned, 70%, 75% correct. In some cases, it's running 65, and other times it's running 80, 85%. But again, on average, overall, it's about 75% correct, and it's been very solid. And now that it's been running for so long, I've been able to try other things and develop other maybe ways of trading and features. And the newest one that has really been the game changer, as I mentioned before, is the probability number. Seeing that probability. Is the probability 56%? Well, it's kind of a 50-50 deal. Is the probability 80%? Is it 75%? And if it's between 64 and 74, it tends to be about 75% correct. If you start getting above 75 into the 80s, it's 80+% correct, as it should be. That's a probability number, right? And when it's below 60 in the 50s, it really is about 55% correct. And so you can have a sense, you can really decide how aggressive you want to be based off of the probability number. Now, some of you may be asking, hey, I saw before that you had a confidence number. Is that still in effect? And the answer is yes. And it still works pretty well. And sometimes they conflict with each other, but it is still a good number to work off of. And I still like to use it as a secondary. The probability number is much stronger. Although, with the confidence number right now, we have a long history with that now. If it's an 8 or below, or actually 7 or below, it's about 68% correct. If it's 8 or above, it's about 80, 85% correct. That number's off the top of my head, but it's in that range. Actually, for a while, if it was an 8, it was 100% correct for a long time. But that since has faded. It's still solid if it's an 8, but it's not 100% correct anymore. And we never thought it would be. It was just an interesting scenario that the number that's kind of in the middle. And that's part of also why I created the probability number, because the thing is, when I say it's a 4 or it's a 6 or it's a 10, or the probability number or the confidence number says that, say, okay, really, but what does that mean? Right? And so it had its value and still has its value, especially when we know if it's under an 8, it's generally less correct than if it's over an 8. But I really figured, you know what, we need a probability number to really give somebody a better sense of the actual reality of how strong is that pressure, and what's the chance it will actually be up tomorrow, and what is the probability it'll be down tomorrow. it just shifts your mindset in terms of how much of a position size or how aggressive you might want to be, what type of trade you might want to make. Do you want to make a small directional trade based off of certain numbers, or do you want to do a 2-to-1 options ratio, or a 3-to-1, or more aggressive 6-to-1 or 5-to-1, whatever it may be? You can decide on your own based off of that probability number. So that has been working out and is still in play. Another thing that we have certainly learned through the years is that volatility matters. you know, that seems obvious for any options trader, but it really does matter. Now, not everybody using the spytomorrow.com signal trades options. I'm very aggressive. I like to trade options, but some people will trade actual stock, or maybe leveraged ETFs, or maybe very specific stock. They may trade Apple, for example, which is fine. That fits within our formula. You can do AAPL-T and then say a D, which is what, about 3 out of the money, and say D3-7, which would be 7 days till expiration. And you could put a C or a P next to it, meaning you're leaning up or down. That's another thing that we may add to it, but that's not official at this point in time. But it wouldn't surprise me if we did something like that to help us understand which direction we were pointing. But you can always go back and review, and that makes you a better trader, to be able to go back and look at what you did, what type of trade it was, and then being able to review that kind of information. Because if you are continuously trading a certain way during certain times and you keep forgetting it fails, your average is going to go up if you understand, hey, this is kind of a warning sign and it may not go my way, or there's a higher probability it won't go my way. So there's so many factors. So using that formula can be very beneficial. And so now let's see, what's the next part I want to think about. So we have our trade. So quite often in the webinars, I would go through the different, A, B, C, D, different trades, but now that's just in the formula and it just works out. So another part that we have been focusing on is this time frame. And again, I think this is a good way to go, especially because, again, we're overnight swing traders. So we're trying to take that emotion out of this process as much as possible. So we may have some general rules, and you can set up your own rules the way you want to do it. I'll share with my general rule is. So if the market opens less than 0.3%, specifically for SPY or QQQ and IWM. And a part of this also depends on volatility, which we do need to address more so in a moment, as I mentioned a few moments ago, but we need to finish that part up. But if it opens low in low volatility, I will then shut the computer down and wait until 11 o'clock and check in again and make some decisions. Now, I may look into SPY tomorrow. We do have a half-hour reading, which now we have some really nice readings. And I'm always testing new ones, but now that we have the probability numbers, I've started to include a section with the probability numbers, half-hourly readings. And so far, so good. It's very early. The data, there's not enough data to call it a success, but the early indications are really good. But we do have our standard half-hour hourly pressure reading and the violet pressure reading, which has been pretty good too. So with this other one, we have 3, and this one may become the main one down the road. And so I may check in and say, where's the pressure? Do I put a stop right underneath a little higher, or give myself more room because it looks like it could move up some more or down some more, depending on the direction we are facing. And so if it's under 0.3%, I'm going to put the computer down. But if it's, up maybe 0.75 or 1%, I may be more apt to be a little tighter and just cash in with those profits. If the overnight mood changed and it turns out we were pointing up and the market went down, that's where the SPY T trades are really nice. Is because you say you had 2-to-1, you bought 2 calls because our indicator said up, and one put because the indicator said down, or excuse, because we have a SPY T trade. So two calls going up with our indicator and one put for a hedge. And so you could sell that put and follow the calls up. And that would help you maybe minimize those losses. If you were directional, you could always take a look and wait it out and see if it goes up, maybe put a little bit of a stop underneath it because you're during the trading day, and then follow it up through the day and see if that's a reality to make the money back and again minimize that loss. So our goal here through these processes, through these different approaches to trading, is to maximize our gains and minimize our losses. And we know we can do this if we're right at least 55% of the time. And even if you're in a phase where it's only 65% correct over, say, a couple weeks, you're still going to do well. Again, it does still depend on you and how well you trade, because you could be 65% correct, but if you make some bad choices along the way, you could end up maximizing your losses and minimizing your gains. It does happen when we're working in the middle of the day. And that's again why, although you can, and I have recommended that you use indicators to get out of your trades, I'm finding that this time frame scenario, which is still a process for us in development. I'm not saying we're the only ones who do this, but the way we do it in developing our style in the Spy Tomorrow community, that's still under development, but I think is showing that just get your paws off that trigger, let things happen. And then, you instead of making 50%, you make 200%. And then that makes up for the time you end up losing 25, 30% because the market changed here or it just didn't work out. You waited till 11 and you lost a little more than you would have if you would have gotten out at the beginning of the morning. I have found that overall, waiting for those big moves and being patient for those big moves is what is truly working for at least my account in the way I do this. Now, one of the things I often recommend is that people take the 30-day SPY challenge. And I often say, look, you should be able to make about 25% per month on average. And that's because I've done so. And the thing is, when we first started, volatility was really high. And some of the recommendations that we made were based off of high volatility, especially like the SPY TA trades and SPY TB trades, which don't work as well in the lower volatility markets. So we often recommend that you find an ETF or a stock that's at least an IV of 20, running between 20 and 30. It can be higher, but again, you need to start off with this recommendation, that is to paper trade. Test all of this out before you put real money in, and test it out well before you even consider becoming a member. Yeah, you may want the probability number, you may want the confidence number, you may want to see what the other algorithms say, but do you need to right now? Is it worth investing the money right now? Or should you paper trade a little bit, see that, okay, this concept works for you, and then say, okay, now with more knowledge, I'm going to be even better. That's the way I prefer people to come in. I was going to say I don't like it when people come in blindly. Oh, look, another opportunity. Let me see if it's going to work for a week and then leave. That doesn't work for anybody. That's a waste of your money. I want you to come into the Spy Tomorrow community because this is something that works for you. You've watched it for a while and you saw that the probability numbers really work well and the up or down signal works well. Now you say, wait a minute, the probability numbers, if I'm not a member, how can I see the probability number? Well, the answer is on the front page of Spy Tomorrow. We show you what the prediction was, the probability number, and what happened the next day. So you can start to see the patterns and how all that works, that strong probability numbers often really do suggest that it's going to be right within that first half hour of the trading day. And that's how we judge correctness. We judge correctness based off of the first half hour of the trading day. That doesn't mean you have to get out of your trade in that first half hour. But if you have a very short time frame to your expiration, like 2, 3 days, you may want to get out earlier. But if you have a little bit longer time frame, 5, 6, 7, 8 days, you probably have time in the morning to let that trade set up. So it all again depends on how aggressive and the time decay and which stocks you're in and so forth. So what is that theta of the ETF or stock that you're trading? So all these things play a role. And yes, it really is up to this basic concept of look, up, down pressure, overnight swing trade. What type of trade? What are you trading? SPY? Is it a ratio trade or is it a directional trade? Now, let me address the directional trade within that that formula. So if we did a SPY TA, which would be one in the money, the first option in the money, SPY TA 0.2. 0.2 represents 20% of the risk portfolio. So if it's a SPY TA1, that would mean you're literally putting your entire portfolio in overnight, and I do not recommend that. You're probably better off at a SPY TA 0.01, 05, 10, 0.10, 0.2, maybe 0.25. But this is in your risk portfolio. This is not your overall. This is not your retirement account. You take a chunk of money, you put it in or designate it as your risk money, and then you use that. And so if you have $1,000 and it's a SPY TA 0.2, that means you're risking $200. And then if it's -5 with a 5-day expiration. And so you have control of how aggressive you want to be in your trades or how conservative you want to be in your trades. As I mentioned, you can just trade stock or an ETF. They don't move, a leveraged ETF. They don't move as much, but with the consistency and maybe with fewer losses or extreme losses, maybe you're going to do well or much better over time, especially when you're 65, 70, 75, even 80% correct over the month. I've seen it work very well. But if you want to be less aggressive, you can do a very small directional trade and say a 0.02. That would be 2% of your portfolio, or 0.05, 5% of your portfolio. So you're making very small move or risking very small amounts. But you also have the control of how aggressive you want to be with your ratio trades. So 2-to-1 is less aggressive than a 6-to-1. That's more like a directional trade, quite honestly. You just have a little something there in case the market goes flying the other direction. I often like a 3-to-1, 4-to-1, because that means, say, a 4-to-1 would be about 20% of that trade is a hedge. So if there's a big move the opposite direction, I might be able to break even or even make money the other direction. So if you're pointing up and the market completely crashed, well, you have something in the game going the other direction. So I often like to do that. I have found it very beneficial. Now, there are things you need to consider, and that is theta and volatility. If volatility starts to crash, what we refer to as an IV crush, that could be bad. And so these are things you need to consider. And that's why we tend to like to have those higher IV stocks and ETFs. For a long while, a lot of 2023, SPY was not, although we're named after SPY, although, SPY tomorrow is all about the algorithm is based off of SPY. We can, in that is considered the general market as far as we're concerned. The thing is, trading it when it was at literally a 9 and 10 and 11 IV just wasn't worth it. So we had to work with the IWM. Even the QQQ was getting pretty low in volatility there for a while. But the IWM has much more volatility. It was in the 20s. The problem is it didn't always follow suit with SPY. But the gains were often enough that it made a big difference and that we were okay. But if we still wanted to do SPY and it had low volatility, we would probably just do directional trades. So just little moves would make us something overnight. But these are things we need to consider. Another thing that we can consider is our expiration date in terms of how aggressive or how conservative we wish to be. Closer to expiration, the more volatile, the bigger moves you will have in that overnight trade. If it's further out, 15, 30 days out, you're not going to get as big of a move, but that's true on the downside as well as the upside. So you may not get as big of moves, but the risk isn't as deep as it would be as if you had less than 5 days till expiration. And that theta, the curve kind of goes like this, going down, down, down. And then, in the last hours, it's just dropping like a rocket. So if your options are out of the money, well, then you got to get out pretty soon. Your stock could be going the right direction, but if theta is going down fast enough, it could just cancel out any upward or momentum. So these are things that are important to consider. You do have some controls in the process. And you do have control in terms of the type of ETF or stock that you buy. You have control over the position size, the ratio, as well as control of the expiration dates. Again, the further out, the more conservative you are. So you have some of this control, although we're going into a situation that overnight we have no control. Again, there are pluses and minuses to that. The plus is, of course, that you don't have any control. You can't sabotage it. You can't let your emotions get the best of you like happens in day trading. But the downside is you can't get out. You don't have a stop. And of course, that's where and why we developed the hedging system. So if the market flipped the other way, you can minimize your loss many of the times or even gain if the market goes enough. So that's the basics of all this. I've covered a lot. I've kind of done this freestyle this year. I didn't have any notes. You probably could tell. So I probably went in circles a few times, but I appreciate everybody being here. I have some questions that I want to answer for you. The Q&A section is one of my favorite parts, and we'll go through this. And I think that if you have additional questions, you can always hit me up on Twitter at Prosperous. Yes, Prosperous, the way it's spelled. Believe it or not, I got that. I've been around a while, and I got Prosperous on Twitter way back in the day. We're talking almost 20, maybe 15 to 20 years ago. I grabbed that one up for a different project, and so I use it for Spy Tomorrow. I thought that was appropriate. So you can ask me questions about Spy T trading, Spy Tomorrow. And if you're a member, of course, you can talk to me in the Spy T chat and ask direct questions. Now, I can't give financial advice. I am not a registered or professional financial advisor. I'm a media guy, I'm a coder, and I've stumbled across some things that I like to share with the community, and that is this algorithm and these concepts. And so I can't tell you what to do, but I can always guide you in the right direction. I can always share what happened after I did it. I can't tell you necessarily all the time, hey, this is what I'm doing. Wink, wink, you should do this too. Don't do any of that. I can only, once in a while I'll share a little bit of information of what's happening. Maybe it's a earnings or it's CPI. It's like, warning, I'm going to play it cautious or something like that. But I can't go beyond that. But I can always tell you where I talk about these things as it is available to the public, from my opinion. So there's I can still offer really good information, of course, within the Spy T chat, and we can of course share our wins and our frustrations. That's what it's there for, to support each other. Okay, so the first question is, do I have to trade SPY? And yeah, we've talked about that a little bit. And the answer, of course, is no, you certainly don't. Some people have traded stocks that, and this is what I generally recommend, stocks that are within the top 10 weighted of SPY. So, I mean, Tesla's pretty tough, but Apple's a good one, Microsoft, the ones that tend to go with the SPY overall. Any stock that tends to match the over general market and go the direction the market does. So if you're pointed down, chances are it's going to go down with the market. So you can use any stock or ETF that you wish that generally runs with the market. Just have to remember that the algorithm is based off of SPY. It's calibrated to SPY. We do have QQQ and IWM within the membership area, but again, that algorithm that runs the QQQ and IWM is based off of SPY. They tend to work pretty well, but I would give it a 78, well, maybe closer to 80-85% in line with the way it should be. Why have I not changed it? Because I haven't pulled the data, nor have I been tracking the data to actually make those little tweaks. Maybe now that the purple algorithm is well underway, and I have made tweaks to that algorithm, but I haven't had to change it and redo it and restudy everything. So the fact is, I now have more time to do those types of projects. For example, I have a project that has allowed me to I actually show a page where I keep the update of, like, they're between certain numbers, probability numbers, again, like between 64 and 74. This is during this group, this is how often it's been correct. That came up, say, 100 times, and it was wrong 24 times, for example. That kind of a thing. So those little things that I'm able to do. And so maybe I'll be able to make that tweak in the future. All right. Do I have to become a member? The answer is no. You don't. And I, again, recommend that you paper trade first and test the free version on the front page of SPY Tomorrow. And then if you see the need for that probability number, which, again, that is a big, big upgrade for SPY Tomorrow. If you see that need, or for the confidence numbers, I want to see what the other algorithms are doing, because some people use some of the other algorithms to trade off of. There is more than one. The main one, the total one that we use, the max I, is the core of the algorithm. And I know these are just numbers and letters to you. That's fine. Just know there are different algorithms that people will use. There's an algorithm that, when it is zero, is it the G? I'm not sure. Anyway, when it's zero, that often means that it will be a flat market open. And when it's extreme, like a 30 or 40, good chance there's a big pressure move coming one way or the other. So people will observe. I haven't looked and tracked every combination of how we can use these numbers, but again, with this extra time, now that I'm not always, every few months making a big update to the algorithm, it gives me more time to do more things to help everyone. All right, what probability is the highest probability number? Good question. I think ultimately, the highest I've seen is 86. And that is going back maybe 2 months, because I only have so much data going. Well, no, that's not true. I have data going. I was able to work data back to July. So that statement was incorrect. I actually have plenty of data, and the highest one was 86. Could it be 88, 90? Possibly. Has it ever gone below 50? No, the lowest number I've seen is 52. So 70 is kind of the mid-range, and that's true with the hourly. The hourly, or half hourly, I call it hourly, but it really is every half hour. That one, I started at one point, I made an adjustment. So the 70 was a 50 mark. And so that was the mid neutral point, but I flipped it back up because, no, I mean, this is a ratio, percentage, a probability. And so I use the 70 as the neutral mark. So if it's below 70, there's a much, lower chance that the prediction will be correct. If it's over 70, higher chance it'll be correct. But there's always that other 25% that's going to pop up over time. So, but that was a good question. Highest probability. Do you still use the confidence number? Yeah, I mentioned that before, and I still do. And knowing that under an 8, it's about 60, 67, 68% correct. And over an 8, it tends to be around 80%. It's worth noting. So we didn't get rid of it. It's still a value. And some people really like to use the confidence number still. So that will be there, excuse me, for as long as I can see, unless it just becomes completely obsolete. Give an example of a directional SPY T trade. Okay, so that's what we talked about earlier with those formulas. So say you're going to trade IWM. So IWM dash T. The T stands for tomorrow. And let's say we're going to be 3 out of the money. It's a lower cost trade. So SPY IWM dash T, D, and then I'm going to do a 0.1, which would be 10% of my risk portfolio. And then that will be a dash 5, 6, 7. That's how many days till expiration. So that's how we do that. So if we're using a percentage. So again, you would never really use 1 unless you're just saying, hey, it's all on red, it's all on black. I don't think I would. I do not recommend that at all. At all. So because sometimes those big high pressure numbers, there's a lot of anticipation. So you get an 86 or with the confidence number a 16 or a 14. The thing is that high pressure, there's so much anticipation, there's high pressure that if whatever is pushing the market with that high pressure and it disappoints or changes, it's probably going to be a big move the opposite direction. So when you see those high numbers of confidence, yeah, there's high confidence, but if it disappoints, whatever it may be, I'm going to have a hedge. I'm not going to go directional in those situations. I'm going to have a hedge because if it fails, whatever the market and whatever we're measuring, that pressure turns. It's going to just think again, big pressure to big pressure the opposite direction. I've seen it many times and it often happens that way when it is wrong. It's still 80, 85% correct when it's up there, but that 15, 20%, when it goes quite often hard the other direction. So that's worth noting. Okay. Does the reading predict the future? How does it know? Oh, you're talking about the algorithm. Uh, no, it doesn't predict the future. It just measures what we refer to as the pressure at the end of the trading day. And we take our first reading at 3 o'clock, and the second reading is about 3:48, and it goes through the algorithm, those two parts, and there you go. And then the pressure number comes up, and we trade off of that because it often correlates to how the market might open within the first half hour of the next day. And that number is on average 75%. But hey, if we waited till 11 o'clock, 10:30, 11, that number would be 80, 85% correct. But we have to cut it off at a certain point. And so we say the first half hour is fair. And there you go. I mean, you could legitimately say the next day, it's going to be, if you have up pressure, it's at some point during the day going to be, up above the 0 line. And, we'd probably have even better track record than the way we record it. But again, we think that the first half hour is extremely fair and honest in terms of the way we want to approach this. Because some people really should get out in the first half hour. And honestly, after 10 o'clock, I think the mood of the market's changing. And it's just different factors. Yes, it could still follow through, but there are different factors happening after that first half hour of trading that, that the reading that we had the night before just really isn't in play anymore. Okay. Let's see. Is there a daytime reading? Yeah, we talked about that. Yeah, every half hour. Actually, the first reading is at 10:10. And then after that, 10:30, 11, 11:30, 12, and so forth. And we are using the probability numbers. This has only been around for about a few days, honestly. I've just started putting it out there and playing with it. I'm pretty happy with what I've seen, but hey, I got to be honest, I've been happy with some other hourly systems too. I have two that work very well. And I've been very happy with some other ones in the first days. I'm like, yes, this was right on. And it was right on. it just hit it every time. But the way this one's working, I'm pretty happy with. We'll see. Worked really well yesterday, and it's not necessarily there. I think part of the reason why I like it is that there really isn't a trade every half hour with it. It's going to say neutral, up, down. There's certain situations where this is when you trade. When the probability says up and the percentage is 80%, that's when you're going to trade that half hour. And if it says, you know, it says up or neutral and the probability is 54%, well, no, you're gonna step out. And that doesn't happen with the other two half-hour hourly indicators. So this is one thing I'm hoping this really holds because it's been good. It's been really good. So when it says to trade, uh, it's a good time to trade. So far, so good. But of course, 6 months from now, it could, with more data that could go away. I'm always open to being wrong. It does happen. It does happen. I have been wrong, and I make those adjustments. But um, that's why we've been successful. This is why we have the good algorithms we have now because I didn't give up. I saw the potential, and we had those winning times, and then things had to be fixed, and so. I'm very happy where we sit right now. I must say it's been very, very good. All right. Should I avoid trading weekends and holidays? That's a common question. And the answer is not necessarily. Now, some SPY T trades really don't hold together over the weekend. The SPY T B trade or C, in other words, those are some of the old school ones. That's habit on my part. Basically, let's say a 2-to-1 options ratio. You probably want a 4-to-1 option ratio or a very small directional trade over the weekend because you're fighting against a few days of theta time decay. And if it goes against you, even if the indicator's right, you could be wrong. And yes, another factor is anything could happen over the weekend. You have a few days for the market mood to change. Anything could happen. So yes, there is danger, but it tends to hold up pretty well over the weekend. But I certainly wouldn't bet the farm on a over weekend or over holiday trade. Over holidays, meaning the market's closed either the Friday or the Monday. That may be a very, very small directional trade with an expiration that is at least 7-10 days out. So you want to make sure you have longer expirations. Our sweet spot with expirations, at least for me, when I'm trading, is 4 to 7 days out. But over a weekend, I'm looking at 7 to 10 days out for that safety. So that's a good question, a very common question that a lot of people want to know. Do I need a special account? Well, you do need a brokerage account. I don't trade for people. I can't trade for people, and I don't have a system that trades for people. Down the line, is that something that could develop? Perhaps, but that is not the case right now. You're in full control. So if you have a mirror trade, which is what I use, which is switching over to Schwab, uh, or another platform. I mean, you probably want a platform that allows you to trade after the market close for the following 15 minutes, especially if you're doing the free. If you're doing the free version of SPY tomorrow, which is perfectly fine. I mean, no, you don't have the probability number, but if you just use the number, look, on average, it's 75% correct, and just work off that number, you're perfectly fine using the number on the up down pressure on the front page of SPY. It does not show during the day because it does change, and I shut that down not to keep it from people, but I don't show it during the day, but to after say 10 o'clock and between 10 o'clock and 4 p.m. because data is changing and going in there for various other parts of and features within the system. And so that number will point up, then down, then up, then down, and all that. And some people may try to use that for day trading, and that hasn't been tested. And I don't think that's necessarily a good use of it. So I just shut it down so people don't see it until the official number at 4 o'clock. And you have to see the next trading day's date to know that it's official. Because if you see the same date that you're trading, if you're looking at an up down signal, if you're a member or anything in it's the same day, well, then that's an old number. unless say you're working on the hourly, half hourly chart. Okay. What is the lowest IV you should consider for an ETF or stock? Yeah, we mentioned that. Obviously it's going to depend. I mean, there's some stocks that have IVs. This is the volatility number that are 50, 60, 80. But sometimes there's so much premium in those that it's not necessarily a good overnight swing trade. So I would test those. The sweet spot that has worked really, really well is between 20 and 30. The thing is, when it gets above 30 for SPY specifically, we had what we referred to as the $1,000 rule. If it cost you, like for a SPY TB trade, which is kind of a 2-to-1 options ratio, not necessarily buying. Here's something that's worth noting: not necessarily buying 2 calls to 1 put, but buying, let's say, a call in the money. That's what the old SPY TB trade it was. You bought a call in the money and then a put half the price. And if that cost you, or the SPY TS, that's what it was the SPY TS. If the SPY TS cost you $1,000, and the SPY TS was literally a call in the money and then maybe a put 1 or 2 out of the money. And if that costs $1,000, it didn't matter. You could be right, but there's so much premium, you'd get crushed by the IV crush quite often. And so that's the rule we would use. These days, that's not so much a problem because of the lower volatility during the time that I'm recording this. That can and will certainly change, and IV does continuously adjust, but we tend to look for that 20 to 30 range. If it's outside of that, definitely test it and see if that stock works for you, or that ETF. Maybe you're working with semiconductor stocks, for example. You want to test that out. Maybe that's going to work out. Maybe it's going to give you a good opportunity there, or a specific stock like Apple, or Google or Tesla. Okay. Should I get out of my first trade first thing in the morning? In the beginning, yes. In the beginning, yes. And then decide if you want to use the technical method using, so for example, VWAP. I often have used VWAP as a technical indicator, but I'm more going into that time frame. And so, maybe close it down if it's not in your range to sell. Maybe put a stop on after it opens up so you don't lose more than a certain amount, but give it enough room to set up, and then open it up at, say, 10:30 or 11 or 12. Or 1. Test it out, watch it, see what's right for you, depending on the stock. Each stock ETF has its own range, and you should probably really get a good understanding of that stock or option. And that's why, or stock or ETF. And that's why I often recommend that you just stick with one. Don't jump around from one ETF to another necessarily. Maybe have a few that you'll use in different situations. But ultimately, you really want to get to know SPY if you're trading SPY. You really want to get to know QQQ. You really want to get to know Apple or Google, and what is that price action and what is it doing in certain situations. So you know that, hey, yeah, SPY says this, but in past situations during this time frame, maybe certain time frame near the specific government data or certain earnings reports, it acts funny. And knowing that, because you've had experience and you're keeping a journal of sorts, that's going to make a big difference. That's going to make you a little bit of a better trader. And that little bit can really make a big difference in the long run. All right. So no, you don't have to get out in the beginning. I recommend it. Just learn how, especially if you're early in just learning how to do it. Get in and out, and then develop your own system. Again, whether technical or time-based. Okay, a few more questions. Isn't using technical indicators better than time-based? Yes or no? Yes and no, quite honestly. If you are really good at using VWAP, you're probably going to do better than time-based, because time-based is a little more of a random thing. I mean, a stock or a SPY doesn't necessarily always peak at 11 o'clock. Sometimes it peaks at 9:45 and then just goes down. So there are times in which the 11 o'clock hour is not the optimal time. However, when it does work, those gains are so much greater that it makes up for the times that it's not. But that's not my experience. I bet if you're really good and maybe you have some day trading experience that worked at a reasonable level, you could probably extend your gains and minimize your losses better with technicals. That's my gut feeling. That's just a personal opinion. You're probably better off if you're really good, but the time keeps that emotion out and allows us to do what we're doing overnight, just extending that time frame in a way with some general rules that will help us become better traders while still not allowing us to sabotage ourselves, which is a big part of it. So time-based exiting is definitely a big part and is becoming a big part of SPY T trading. What makes the algorithm better than past algorithms? The purple algorithm specifically was what we have. One of the things I think makes this one better is that actual pressure reading. Other algorithms now, the N2VV is one that I had, maybe in my first year, which is really good. And it did measure that pressure between two time frames. It was really pretty good, but then it did eventually break. Some others were just a point in which we measured, a point in time in which we measured this pressure. And it was good, but they would fade and come and go in and out of favor. But we saw the pattern. But it was once we started using this pressure system of measuring between these 2 points in times near the end of the day that we were really doing what we were talking about the whole time. The whole time we're talking about we're measuring the pressure. Well, we were, but this is really measuring the pressure between 2 points of time at the end of the day. And I think that really helped. And now I've had to tweak things along the way, use, add and subtract some other algorithms. One of the things that I recently did, the last update or tweak, is using one of the switches. It's the D6 switch, which tends to be the best one for applying to the purple algorithm. And it really has made it a little bit more accurate, especially when it's in those neutral territories. It'll push it one way or the other and tends to make it a little more accurate. So it's really kind of like uh, the core is the purple max I, which some people just trade off of. But I've now applied the D6 plus or minus to it, and that's made a big deal. Plus a little bit of three other algorithms are mixed in there, which seem to kind of round things out a little bit. Seems to be working pretty well doing that. So that's the big difference, is that we're actually measuring the pressure like we did with the N2VV back in the day. But we're doing it better today. Okay, let's see. What is the number one factor for the reading not being correct? Oh, when the pressure changes or the mood of the market changes, it's usually news. So earnings reports, obviously, but hey, if war breaks out on the other side of the world on the, overnight, that can change the mood of the market. But earnings, government reports, CPI, PPI, those are big ones that we watch. Inflation data, jobs reports. These are things that can affect and do affect the market. So if we hear a lot of chatter in the news, hey, make note. And we have a calendar in SPY tomorrow that we will look at and say, hey, is there anything coming up? And we try to keep each other. If I notice something, I don't always notice it, so I don't guarantee that I'll make note of it in the chat. But if I notice something, I'll say, hey, PPI is coming up, CPI is coming up. Oh, we have, Google earnings tomorrow, Apple earnings. Those are the kinds of things we like to mention, remind everybody, because you hate to say, oh, wow, hey, there's great pressure going that way. I'm going to take this opportunity. And then, you're really dependent on the earnings of a corporation. And if it's bad news, the market's going the other direction. So that's what we're doing. And then that is what really does change the market the most. It is news. Let's see. Should I trade on neutral days? It's a great question. And we do have a number of algorithms that can kind of override, for example, last week, the SPY was neutral, and it was a little bit down, but the QQQ and the IWM algorithms were solidly up. So I pointed up. Was I taking a risk? Absolutely. Educated risk. Could it still gone down? Yes, it could have. But sometimes I'll do that. And so the answer is yes. Now, if you're not a member and can't see all the other algorithms and other information, well, I would say no. Don't. If you're just using the free version, take the night off, get some sleep, not worry about what's happening overnight, and then, Now, I did skip out last month on the CPI report. I had gotten burned the month before with an IV crush, and I said, I'm just gonna step aside, and I didn't follow the pressure reading. It was the biggest move, and I would have done great if I was in it. So I tend to like to put something in each day because you never know. But I will keep it a very, very conservative risk overnight if it is a neutral, because sometimes it'll open flat, sometimes you just go up and down, above and below. That's pretty common. If it's a neutral, you may get a little up, little down, little up, little down. I've seen that many times in those situations. Okay, let's see here. Three more left. Which of the purple algorithms is most important? Well, the max I, purple max I, is the core main reading, and then all the other factors are kind of window dressing around it, kind of massage it in one direction or the other. But the max I is the core algorithm that we're working off of. But I would not follow just always the max I mean, the other parts of the algorithms, adding the D6, the other three algorithms that work with it to make the total algorithm, they're there for a reason. And it kind of just massages the whole experience of the purple algorithm. What is your number one recommendation for beginners? The number one recommendation is the one that I have mentioned a few times, and that is to paper trade ahead of time. Get to know the system and make sure it is right for you. I think it is right for those of us who want to be active, but don't want to day trade, don't have the patience or time. You have a job, you just don't want to spend hours at your screen each day, whatever it may be, or 2 hours, 3 hours in the morning. You want to be active, you want to be aggressive. And again, this is aggressive trading. I think you're going to do better than day trading. I think the odds are in your favor to make money doing this compared to day trading, especially over the long term. However, not everybody does do well. Some people let emotions. Some people don't follow the plans. Some people don't test it out to see if it's right for them. So that's what I say for beginners. Paper trade it. Watch the front page of SPY tomorrow. Take a look at what those probability numbers were the day before. Keep an eye on what the pressure up or down signal is at the end of the trading day and trade off of that, assuming that it's about 75% correct on average. Again, some time frames it's only going to be 65, and other times it's going to seem like it can never be wrong. We just went through one of those phases, like a month, 6 weeks, it seemed like it could never be wrong. But then we got a few days in a row that were not spot on because of earnings. And so, and another little thing that I have noticed is that not most, but it depends, I guess, on earning seasons. But quite often, the beginning of the month is where it's mostly wrong compared to the second half of the month, where it has a higher percentage of being correct. Just something I've observed recently. That may not stick, but that's what it's all about. Okay, so when you're ready, I do recommend you become a member of SPY Tomorrow. I've put a lot of time and energy into developing this system. I make money from it. My account is doing 4 times what the market is doing right now, and I think that's a pretty good thing. Maybe even if you don't make that 25% minimum that I think people can make each month, even if it's 5 or 10%, and I know that's a lot of work for 5 or 10% a month, but you're probably still beating the market. And if it's just an overnight trade and you just make it part of your routine, I mean, again, I think you can do the 25. In some months will be 50 and 100%. It's happened all the time. A lot of this depends on on the volatility, quite honestly, of the market, and of course, your skill, learning how to maximize your gains and minimizing your losses. And again, starting with that paper trade, get to know the system. If you're confident enough, become a member and get all the other numbers. And hey, I'll see you on the inside. Thank you for watching this webinar. If you have questions, connect with me on Twitter at Prosperous or in the SpyT chat. We'll talk to you next year with the 2025 Spy Tomorrow webinar.